Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 13th, 2020. I'm Frank Ochoa, aka PivotBoss. Here's a look at the ES in the daily time frame, and you'll see that we have had a tremendous decline here and dropped nearly into that 2300 December 18 low. That's a low that likely needs to be tested at some point, but you'll notice right now we are lock limit up as the futures rallied over 5% in overnight trading. Taking out the previous session's low and bouncing back pretty aggressively. This is the third time this week that we've been lock limit. The first two were down, and now this one is up. So very similarly to how it played out the last couple of times, we may see price pop higher a little bit here after the RTH open, which could take us to a lock limit again, or at least a suspension of 15 minutes if we hit plus 7%. Now overall, this market continues to be highly volatile. It continues to be highly bearish, and bounces like this in a bear market here tend to be much more aggressive than what you would see in a typical bull market. So it's not uncommon to see aggressive bounces like this. It by no means means that this is a low. We could continue to see much more selling pressure ahead overall, and again, likely needs to take out that 2018 low at the very least here, and could see much more as more and more bad news continues to pour in day over day. It's going to be very difficult to find a bottom until news day over day becomes markedly better, and until that occurs, we could continue to see quite a bit of downside price action here in the markets. Again, volatility continues to be extremely high, so mind your risk. Sitting on your hands is an option here in this type of environment. Again, not likely to see a low here at this time, but next week we could see a build out week. You know, we had the initial sell off here, and then we had a week of mostly sideways price action, 1, 2, 3, 4, 5 days, and then we opened up Sunday evening with a big sell off. So we could see a little bit of build out next week here before we see the next major decline. Again, failing to hold 2750 here for the ES would suggest more weakness toward the 2300 level. If we take a look at the NQ, also lock limit up right now, up 5+%. This one again, very close here to support, hitting 7K. So it got down to 69.25. That's a big time support zone. If you go back to 7K here, you'll notice how significant that area of support has been. A failure to hold 7K opens up the next level below, and that's going to be around 5,800. That's the December 18 lows as well. So again, going to be hard not to see this thing continue to push toward that zone, given the news that we're seeing day over day. Again, unless that news starts to become markedly better, or until perhaps the virus just magically goes away, this market may continue to see this type of high volatility environment with very steep declines and even very bullish reactionary bounces. But despite the bounce right now, again, we could see more weakness overall. Taking a look at crude oil here, this one has done fairly well holding the $30 level. You'll notice here that we got down into 27.34, and since then we've seen some absorption off the $30 level. 3 days running here, 3 out of the last 4 days have come close to that $30 level, and each time it has been defended very staunchly here. Again, that's a nice intraday level, and comparatively speaking, the crude oil has traded a bit more orderly during the intraday than say the ES or the NQ right now. Again, holding 30 would suggest a bit of a bounce toward 38. That remains the midpoint of the impulse sell-off this month. A failure to hold 30 would lead to a pretty significant decline ahead, likely taking out those 26s from the previous lows. All right, let's take a look lastly at gold futures. Again, gold has not been a safe haven this week. It has been a very bearish move here throughout the week, but we have now taken out those recent lows. That's the key range lows. Right now, again, we're seeing a big rejection day here developing. Again, the day's not over, but there is a very clear rejection that has developed, and that strong rejection could lead prices right back toward recent highs. Again, what I mentioned before was we look like we're developing a bit of an expanding range here, and taking out the recent high and dropping, taking out the recent low and bouncing, holding, 1564 to 1574 would suggest that we could bounce all the way back up towards 1700 finally. So again, we may be in a range-bound market with an upward bias, and while this market has not been a safe haven this week here, we may see this thing bounce back toward highs finally if it can continue to hold the 1575s. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, continue to mind your risk. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.